Let's get a view now on the US market with Yu-Dee Chang from ACE Investment Strategist. Staying with us, Ian Bremmer, President of Eurasia Group. Yu-Dee, we had this 17-month high close for the S&P 500. You remain bullish. Is that because the Fed has really set the scene for more of a risk trade, more of an inflation trade?
Well, that's one, of course. I think secondly is that there's just no other place for money to go right at this time. And because of the accommodative policy of the Fed and the fact that there's so much cash out there and no return other than the stock market, that's why I believe that we will continue, although maybe in a very choppy fashion, the market continue to move upwards.
Translate this Fed speak for us, could you? Extended period, how long is that going to be? And do you agree with this broad consensus that a Reuters poll seems to be suggesting that we could see a hike in the Fed rate by the end of the year?
Yeah, it's kind of interesting. The Fed's language, the so-called extended period, to them, to most economists, is about 6 months or so. I think right now, before today's meeting, according to the federal funds rate futures, there were like a 66% chance that the Fed would move up the rates by the end of the year. I think after today's meeting, still, the federal funds rate model gives a 58% chance that the Federal Reserve, sooner or later, before the end of this year, will have to move the rates up.
Yeah. Listen, I want to get talk to the other side of this issue here. I mean, the Fed's ability to keep rates exceptionally low for an extended period of time depends on whether China, whether Japan are able and willing to keep buying U.S. paper. China, what do you think?
Well, I mean, the Chinese have already, over the last few months, right, been actually selling U.S. Treasuries. They've been easing back. And I think there's no question that if they get to a point where they feel like they need to make a statement about a significant move in the renminbi, even a 5% or plus hike, at that point, they're going to also link it for purely domestic national reasons to say, you know what, we're also going to be buying fewer U.S. Treasuries. We need to talk about an alternative reserve strategy globally. You put those two things together, that becomes a very politicized brew.
Indeed, indeed. Okay, a lot more to talk about with Ian Bremmer from Eurasia Group in just a bit. We'll get back to Yu-Dee Chang as well, both in just a while, Karen.